Hello again, everyone. This is Chris Thomas, one of the mortgage experts. In this video, we will discuss debt-to-income ratios. First of all, let's talk about what the debt-to-income ratio is. The debt-to-income ratio, otherwise known as DTI, is the ratio of liabilities to gross income. The reason lenders are concerned about the DTI is because that's the ratio that's used to determine whether someone can afford to pay their mortgage. It's important to note that different loan programs have different DTI ratio requirements. Some loan programs have more than one debt-to-income ratio. They are known as the front-end DTI and the back-end DTI. FHA loans, in particular, have two DTI ratios. The front-end ratio is often referred to as the housing ratio, and the back-end ratio is referred to as the total debt ratio. Conventional loans, which are non-government loans, and VA loans have only one DTI ratio. In the past, there were two, but this guideline has changed. Let's discuss how the DTI ratio is calculated. The front-end DTI is the principal plus the interest plus the taxes plus the insurance plus HOA dues, if applicable, divided by the total monthly gross income of the borrower. The back-end ratio is the housing expenses, which is everything we discussed above, principal, interest, taxes, insurance, and HOA fees, plus the monthly payments that show up on the credit report divided by the total monthly gross income of the borrower. So what exactly are the DTI ratio guidelines? Well, that depends on whether the loan has been underwritten manually by a human or by Fannie Mae's underwriting software system. The maximum debt-to-income ratio is always higher when the loan is underwritten using the software. This is the major reason why you should never use a lender who does not use the underwriting software. Here are the DTI ratios for conventional loans. If the loan has been underwritten manually, the ratio is 36%, but it can go as high as 45% with strong compensating factors. If the loan has been underwritten using the Fannie Mae software, then the ratio is 45%, but it can go as high as 50% with strong compensating factors. Some of those compensating factors include excellent credit, very high reserves, which means money in the bank, or a very large down payment. Here are the DTI ratios for a VA loan. If the loan has been underwritten manually, the ratio is 41%. If it has been underwritten using the VA software, there is no set maximum ratio. Ratios of 45% to 50% are not uncommon. Here are the DTI ratios for an FHA loan. If the loan has been underwritten manually, there is a 31% front-end ratio and a 43% back-end ratio. If the loan has been underwritten using the FHA software, there is no set maximum ratio. However, a front-end ratio of 40% and a back-end ratio of 50% is very common. When you're looking for a mortgage, you need an expert. If you're a real estate agent and you've ever had a deal fall apart, it's time to start referring the mortgage experts to your clients. If you're a consumer looking to buy a house or refinance an existing mortgage, you need expert advice. Call us, Chris and Debbie Thomas, the mortgage experts, and you'll get the advice and the mortgage you deserve. If you like this tip, check out all the tips on our website. Tell everyone you know about the mortgage experts, and call us with any questions you might have.